Greetings, traders out there in Traderland. My name's Des Woodruff, Senior Analyst and Mentor here at Grok Trade. It's Tuesday, February 15th, 2011, and the market's starting to pull back. We have the Dow down 0.34%, about the same on the S&P, more than that on the NASDAQ, almost down 0.5%, a half a percent to the downside. 0.75% down on the Russells. Big drop in small cap. The banks actually led the markets all day long until the last 3 hours of the trading day, and then we saw a major correction take place. We have the banks down 0.56%. The VIX pops 2.7%. We have gold rising. The US dollar also in positive territory. Now, let's take a look at the technicals. We were talking yesterday that all major indices, for the most part, were at resistance levels. I did go flat the market last night at the end of the day. Glad that I did. What we have here is a reversal taking place right now. What we have is a lower high and a lower low. So we have a pivot in place, but we haven't created a down leg yet. You need 2 or more candlesticks going in any one direction. We don't have that yet. However, we do have the beginnings of what could be a down leg. So if that's the case, who's in control? The bears are in control. After all, we have a lower high, lower lows. I don't care if that's a white candlestick, a red candlestick, a purple candlestick. If you have lower highs, lower lows, that is a stock or an index going in the downward direction. So I can't say wrong, because if you're bearish, then that would be the right position. But anyway, what we have is a downwards movement taking place. We also have reversal patterns that create themselves. And let me show you on Dow. Here we have the Dow. The Dow busted over a trend line, stayed above this trend line, and then that trend line now is acting as support. So if we get a lower close tomorrow on the Dow than today's 12,226. If we close lower than that, it will have broken that trend line, that support line that's coming up from way back when. I'll show you that line. This line goes from August up through the highs here in November, cracking it here in February. Now it's acting as support here in February. Here's the NASDAQ. The NASDAQ shows a breakdown below support, that support line then acting as resistance. We come up, that line acts as resistance again, and as of yesterday it acted as resistance. Today we have a lower high and a lower low, so there's our pivot. Again, we don't have a down leg yet, but we have the makings of that. If you look down here at the MACD, look at the big negative tick that we have here on the histogram line. That means we have a crossover taking place, and that crossover is happening up in overbought territories. So this oscillator could tell us areas that are overbought or oversold, and telling us when we might have opportunities of a reversal taking place. Here's the Russells. The Russells, we broke down of this trend line. I've made it thin. That was acting as support way back here, but now resistance, come up resistance. We busted through it. We smacked this trend line, resistance, resistance, and resistance. Now we have made a lower high and a lower low. There's our pivot. There's our negative tick on the MACD. Things are looking more bearish than they are bullish. This is a great time to either be sitting on your hands and SOH, sitting on hands, being flat the market, or having your longs protected with tighter stop losses than what you are normally comfortable in doing to preserve profits. And you can look to maybe do some bearish plays. Now myself, I think that's too risky because you're still above all major moving averages. You're in an uptrend. You have the QE2 or quantitative easing that's still taking place by the Fed. So the idea is anytime you get these dips, actually buy the dips as long as they're pumping money in buying our government bonds. So there it is. Now, question for you. I'm going to look at this. Tell me, what type of reversal pattern is this here, or this? Do you see what happens after you get the reversal pattern? Look at this. Boom, pop. This reversal pattern, boom, nice pop there. How about this reversal pattern? You had this and a big crash that happened right after. Right here, reversal pattern, nice run. Anyway, there's a lot of different reversal patterns, both bullish and bearish, free of charge to you tonight. If you want to participate, feel free. We have a lot of people signed up right here, and it's more popular than what I thought it was going to be. We have a big group tonight. Be glad to have you. And it starts at 9 p.m. Eastern Standard Time, 6 p.m. Pacific. And all you have to do is send Mike an email and saying, "Get me in." And please do it sooner than later, because he's going to be busy on a one-arm paper hanger by the time we get close to 9 o'clock. So if you wait until that time, you might be getting in late. So anyway, reversal patterns, and those reversal patterns explain, and I will be going into great detail on that and talking a little bit about mentorship after that. Take care. Safe trading to each and every one of you. And if you be so kind, down there below, give me a thumbs up.